Back in the studio then, let's get some more insight now, shall we, on the latest moves and trends in the market as the conflict drags on. James Brodie with me, head of Flux Institute and ex-trader. James, always good to have you with us. As equity and bond markets then, you know, they now catch up with the latest developments, whatever they are really, in the Middle East. What's been the picture and sentiment?
Yeah, thank you, Lisa. We talked about how slow, particularly the equity market was to react. Now the equity market's falling aggressively. On the open this morning, Nikkei was down 5%. They had a small bounce. But today, if we look at the S&P, you can see the S&P is clearly trending down. It's broken through the 5,550 level. The next support really comes in at 6,147. So we've got 200 points to go before that was the previous peak in February of last year. But clearly it's a downtrend, it's broken support, stops are being triggered. And while there's no news or no positive, there's no outcome in the Middle East, this is going to keep going down. Again, what's driving it? We're seeing it's inflation, of course, that's going to hit growth. One thing that's interesting, if we look at the bond market, this is an hourly chart over the last month, but you can see in the last day, suddenly the two-year yield has fallen 20 basis points. So where the original market reaction to the Middle East conflict was inflation, now in the US, where the Fed has a dual mandate, the market's suddenly realizing this is actually going to hit growth. So the last 24 hours, the last trading day, the OAS has gone from pricing 14 basis points of hikes by year end to now pricing 4 basis points of cuts. Even with inflation, the hit to growth, there's no way the Fed could raise rates. So yields are coming low on the back of that.
We often talk, don't we, in more normal times about what sort of key economic data is coming out on both sides of the pond. We've tended just to been slightly off that as this conflict has dragged on now into week 5. Is there key data coming out this week? And also, you know, what's the dollar up to?
We do have data this week. On Friday, we have the US payrolls, which is the sort of number one key data point. But I think the market's going to look through that. Unless, of course, it's weak. And then the market will take that as another signal, a negative for the economy. That would hit equities hard. And the dollar, what's happening with the dollar? That's strengthening again. If we bring up the dollar chart, this is a dollar index. You can see there's a key the dollar was going down for 9 months. People were talking the death of the dollar, front of all the magazines. It's now gone sideways since April, May of last year. Now today it's breaking above that resistance 100.40. And what's interesting about this is normally interest rates going higher is strong for a currency. But what we're seeing, particularly for instance, UK and Eurozone, interest rates are going up much more aggressively than the US because the central banks have a straight inflation mandate. And what's going on to the commodity price is going to be far more impactful, negatively impactful for European and UK economies. So those interest rates are going up far higher, far quicker in Eurozone and UK, but actually it's the dollar that's strengthening. So the US will be less impacted, the GDP growth will be less impacted, and it's also being seen, I guess, as a safe haven.
Yeah, quite. You're back, of course, just aren't you, from Singapore. What was the mood like out there? You know, Asian markets. What was sentiment like?
Well, this was 2 weeks ago, and again, similar to what we were seeing in the US at the time, the market was it didn't see a problem. Looking straight through it, it wasn't big headlines. But I think right now, what we're starting to see in the next week is the final cargoes that went through the straits before they're shut are being delivered, and then from between April 1st and April 10th. And then there's no more cargoes coming through. And that's when the supply is going to really hit. We're already seeing supply chains being hit, particularly in Asia. But when no more cargoes arrive, that's when we see real problems. And
particularly for farmers, you know, fertilizer. I mean, it's just looming now, isn't it? Those issues. What are they going to do?
Absolutely. We're going to see inflation there, shipping, jet fuel. We're seeing it's a huge supply chain crisis. Absolutely.
All right, James, for now, thank you very much indeed. I will see you tomorrow. Thank you.
Thanks, Lisa.